Gold, $10,000 an ounce. Sounds insane, right? But what if I told you we're already halfway there? Because behind the headlines and all the noise, a quiet revolution is unfolding in our financial system. Central banks are buying gold at the fastest pace in modern history. Currencies are weakening. Inflation isn't dead, it's just hiding. And for the first time in decades, the world is starting to question the one thing that holds the entire system together: trust. So today, we're going deep. This isn't about hype or hopium. We're talking about the real reasons why gold could, yes, realistically hit $10,000 an ounce. By the end of this video, you'll see that this crazy number might not be crazy at all. Let's start with the obvious: gold's massive rally. In 2023, analysts said gold was stuck. They said interest rates were too high, the dollar was too strong, and inflation was under control. And yet, gold broke all-time highs in almost every major currency. It didn't just inch up, it exploded. Why? Because while Wall Street was busy chasing tech stocks, the world's central banks were quietly loading up on physical gold. They bought more than 1,000 tons in just 1 year. We're talking about China, Russia, India, Turkey. Even smaller nations are converting their paper money into solid metal. When the very institutions that print money start buying the one thing they can't print, you should probably pay attention. This isn't just a trend, it's a fundamental shift. We're not talking about a sudden spike in jewelry demand or a wave of short-term speculation. This is about something much bigger: a silent currency war. Every country is fighting to keep its currency from collapsing under a mountain of debt. Just look at the United States. The national debt has crossed an eye-watering $35 trillion, and it's growing by $1 trillion every 100 days. That's not sustainable. To keep the system going, they have to debase the dollar, print more, spend more, and hope that inflation doesn't spiral out of control. But the rest of the world sees what's happening. They're not just sitting back and watching. This is why the BRICS nations, Brazil, Russia, India, China, and South Africa, are openly discussing a gold-backed trading system. This isn't just talk. It's the beginning of de-dollarization. If the world starts to move away from the dollar as the primary reserve currency, gold doesn't just rise, it revalues. And that S, when numbers like $10,000 stop being a fantasy and start being simple math. So let's talk numbers. Real, grounded numbers. Today, all the gold ever mined in human history is about 210,000 tons. At current prices, that's worth roughly $16 trillion. Now compare that to the world's broad money supply, which is over $100 trillion. If gold were to once again back global money, even partially, let's say just 20% coverage, gold would need to be priced at around $9,500 an ounce. See? That's not a wild guess. It's simple arithmetic. And remember, gold has been undervalued for decades. If you adjust for inflation, the 1980 peak of $850 an ounce is equivalent to over $3,000 today. So if gold simply does what it did before, and then you add a fear premium on top for all the global instability, suddenly $10,000 doesn't seem like a wild number at all. It seems like a logical one. But beyond the math and the markets, there's something much deeper at play here. Gold has outlasted empires, currencies, wars, and financial crashes. It is humanity's collective memory of value. When banks fail, when currencies crumble, when trust evaporates, gold doesn't flinch. It doesn't care about interest rates or politics. It is the asset of last resort because it is the only asset that is not in someone else. Liability. And in a world absolutely drowning in debt, that truth is starting to hit hard. People are waking up. They're realizing they want something real, something honest, something that can't just be printed away into oblivion. We are entering the perfect setup for the next gold supercycle. Mining supply is stagnating. New discoveries are down 60% over the last decade. Meanwhile, demand is exploding. It's not just central banks anymore, but retail investors, sovereign wealth funds, and institutions that once laughed at the idea of owning gold. There's a tipping point coming, a moment when financial panic meets physical scarcity, and the revaluation happens all at once. We don't know what the exact trigger will be. It could be a banking crisis, a dollar collapse, or a major geopolitical shock. But when it happens, the move will be violent. We won't be talking about a $100 move. We'll be talking about thousands. And when it's all over, the world will look back and say, of course gold hit $10,000. How did we not see it coming? Look, gold reaching $10,000 isn't about greed. It's about trust, time, and truth. The same powerful forces that pushed gold to $850 in 1980 and to over $2,000 in 2020 are still here. Only now they are magnified. We have more debt, more money printing, and less stability than ever before. So whether gold hits $5,000, $8,000, or $10,000, the specific price isn't the point. The principle is. Owning gold isn't about trying to predict the future. It's about protecting yourself from it. If you believe gold's story isn't over, hit that like button. Share this with someone who still thinks the dollar is untouchable. And be sure to subscribe for our next deep dive, where we'll uncover what happens after gold hits 10,000. Thanks for watching.